Namra Achyutan Pishati from BDM Advisors Private Limited. Today we are going to discuss how to select a stock for positional trading in equity market. So I generally update on a daily basis the support and resistance of each and every F&O stock in my Google Sheet, and I calculate it using my 6 super trend. So if by looking at this Excel, we will come to know that there are few stocks which are trading below the 6 super trend, and there are few stocks which are trading above the 6 super trend. So a stock which is having orange, light pink color is the stock which is trading below the 6 super trend, and the stocks in which you can get all the 6 colors are green in color, that is the stock which is trading above the 6 super trend. So since we are going to invest in the equity market, we will only select those stocks which are below the 6 super trend. And this I do it manually, and I have maintained an Excel to inform you which stocks is to be traded and at what price. So the general movement below the 6 super trend is around 15%. That means if a stock falls below the 6 super trend, you can expect additional 15% fall from that level. So we can plan our trade in the systematic way. So these are the stocks which has come in below the 6 super trend, and this is the date on which the script has fallen below the 6 super trend. So we have given the buy 1 value to buy 10 values, different values with a fixed interval of 25 rupees, and the quantity that we are going to purchase is based on 10,000 rupees per trade. So suppose if a script falls, first I will be buying a stock worth 10,000, and if the market falls again by another the second buy value, I'll be buying shares worth 10,000 rupees. So this is the system that we adopt, and we have also calculated the actual high and the actual low from the date on which the call was given. This gives us a very fair idea what was the low and what was the high after the call was given. And here it is a day's high and day's low that is recorded to check whether any of the trade has been executed or not. So you can see there are multiple scripts that has come into this our range for buying, and we have bought these shares on these particular days, and this is the buying price and this is the average price. Now here we have also calculated the target price and the target difference in the target buying price and the target in points. So you can see that I'll be booking profit in Bata India at 1650, and the current price is 1428. So the profit is of 21 rupees in 7 shares. So this gives us a very clear idea whether we have to hold the stock or we have to book profit. Whenever the LTP is greater than your target, it will show you that you have to book your profits. In that way, you will exit from the stock, and the profits, when you exit, here you have entered as plus in the case of buying, there you have to enter minus in the case of selling. So this will automatically calculate the overall amount of money deposited or traded used for one particular script, and this will give you the days high and days change, and this will give you the exact profit that you have gained after your entry. So if you see here, there are few stocks which are in red, and the most of the stocks are in blue or green. So this will give you a very clear idea in this dashboard that for these stocks are in green, and there are few stocks, 5 or 6 stocks, which are in red. Now coming to this is giving us a fair summary about our portfolio. The current account value is currently 15,33,000. The positions that has been created is 14 lakhs, and the balance is left is 1,26,798. That means we can take additional 13 trades in this particular with this capital. Now the profit earned is Monday's profit was 8,456, and the unrealized gain is 33,314, and we have not booked any profit. That is why it is showing 0.00 and the ROI in terms is 2.22. So we can get the clear trades, how many trades has been taken, what is the total number of shares owned, what is the average cost, how many times we have deposited cash, what is the monthly salary, hourly salary, and the dividend income. Here we are also getting a chart which displays a 1 year change in that particular script. So you can use this drop down box and select any stock that you want to decide what is the general move of that stock over a period of 1 year. Now here we have many data like stock price, the percentage change yesterday from day before yesterday's closing. Then there is an open price, high price, low price, volume. Then there is previous close, market capitalization. Then you have 52 weeks high, 52-week low, the total number of shares available for trading in the exchange. And then this is the PE and this is the earnings per share. And this would be called as a fair value is a midpoint between 52-week high and 52-week low. So if the price is above this 539, you can start booking your profits. And if the price is below your fair value, then you can start accumulating that stock if it comes below the 6 super trend. And this image shows us what is the capital that has been deployed and what is the free cash available for trading. Here, we have also started noting down the Nifty price as on when we started the trading, and the current price today is 17,398. If you see here, the Nifty has fallen by 3.04%, but our portfolio is in the green at 2.221%. This shows that our selection of stock is good and we are earning a very good profit compared to the Nifty. Generally, whenever a Nifty falls by 5%, the stocks generally fall by 8 to 10%. But in this case, since we are accumulating those stocks which are already beaten up, we are getting a very good profit, because when a stock has already fallen, the market fall will not affect its fall. So it will try to bounce back and you will get good profits in the immediate future. Now, here the list of stock has been taken from the F&O list. So if you are not comfortable with the certain scripts, you can avoid that script for purchasing. This can also be utilized to select any stock that you prefer in your portfolio. If you don't feel like I don't want to trade in IEX, you can avoid this call and you can take a script which you are comfortable with. So since we are deploying only a limited capital at one time, the average also keeps up. We can keep on averaging when the market goes down. And as I said, the chances of it falling by 15 to 20% is very, very low. There are a few scripts where you are got 7 to 8 entries or 9 entries, but there will always be a bounce back from that level. But if you see the overall levels, you are getting hardly 2 to 3 trades in one particular script. There were only 2 scripts that has come down very highly, that is Z Telefilms, then your Godrej Properties and Biocon. These are the scripts which have fallen considerably, and rest of the stock is only down to second entry or the third entry. This would be the average entries that you will get. And as soon as you book your profits, you keep an entry on this Excel that will automatically calculate your profits, booked profit, open the profit, unrealized profit, and the M2M losses wherever you are having one. And this position Excel will give you the average gain in your portfolio. And this is the breakdown that how much amount you have invested in one particular stock. So this gives us a very fair idea about the number of stocks that we have invested and what is the percentage of our investment in that particular stock. So you can see here, we have invested very, very small amount in each stock. There are only 3 stocks where our investment is more. One is your Z Telefilms, which is around 5.5%. Then the other is about Godrej Property, which is about 4.8%. and there is Biocon, which is around 6.3%. But if you look at the overall level, it's only 1 or 2% of your portfolio. So if 1 or 2 stocks also tanks, that is not going to affect your portfolio, since we are buying when the market is going down. And this, we have tested it very over a period of time, that whenever the market is below the 6 super trend, there is every possibility that will bounce back and you will get good returns. There are instances when a company gives a bad news, or if there is any problem in a company, that may affect you. But since you're only deploying around 5 to 6% of your capital in one company, your portfolio is not that much at risk. And when you start making profits, these losses will get adjusted. So in general, the Nifty gives a CAGR of 12 to 14%. So you can expect around 15 to 18% profit in the portfolio over a period of time. If anyone wants to understand this strategy in a more clear way, you can contact me directly on 894-380-3870 and get more information. This is just to guide you how we can use a simple step and make good investment in good stocks. So if you're not comfortable with F&O stocks, you can select those stocks which are only in Nifty 50, and then you can manage your portfolio. And this Excel will also help you to identify what is the profit that you got over a period of 1 year. So I hope you will look into this video once or twice and watch it in a very clear manner and understand the concept behind this video. So if you enjoy, if you like and understand this thing, you can implement in your trading and you can earn handsomely. Thank you for watching.